In January 2009, U.S. Air Flight 1549 made an emergency landing in the Hudson River just outside of New York City after striking a flock of Canadian geese. We know this heroic landing by the name Chesley Sullenberger, or Captain Sully. It's one of the more heroic stories in aviation history, followed by books, movies. Captain Sully was portrayed by Tom Hanks. And if you mention the name Captain Sully, people know exactly who you're talking about. The entire flight from takeoff to landing in the Hudson took approximately 5 minutes. Prior to that moment, Captain Sully had logged nearly 20,000 hours of flight time. That's 1.2 million minutes. Yet his career is defined by what happened in 5 of those 1.2 million minutes.
There's an analogy between an airplane pilot's job and investing that's very applicable here. An airplane pilot's job is filled with hours upon hours of boredom, mixed in with very brief moments of sheer terror. And that pilot's success is not defined by what they do in the hours and hours of boredom. Instead, their success is defined by how they respond to those brief moments of sheer terror and panic. Investing is the same way. When everything's going well, in the years and years of strong markets, that is not what defines your success. Instead, it is how you respond to the moments of terror and panic. Your success as an investor is not defined from what you did between 2000 and 2008, what you did from 2010 to March of 2020, and what you did from July of 2020 up to last year. Your success is defined by how did you respond in 2008 and 2009, and how did you respond in March of 2020 when the pandemic first started. And there are a lot of parallels that we can draw to today and where we are with the recent invasion of Russia into Ukraine.
Yeah, and the reality is 2022 started in a down way with the stock market, with rising inflation, rising interest rates.
Yep.
And what's happened over the last couple of days has sent shockwaves through Europe and other parts of the world, even here in the United States. It certainly impacted the stock market, piling on to a time when the stock market was already in a period and time of some turbulence. And that's why we're putting this podcast out today to touch base with you on what does this mean for the markets? What does Russia's invasion from Ukraine mean? What, if any, action should you be considering taking or implementing? And it started yesterday, which was Thursday, the 24th
Of
February, when overnight Russia began or commenced the invasion of Ukraine. The immediate reaction in the stock market was a significantly negative one of a 700-point drop at the start of the day.
I woke up to feed Cooper, I think it was maybe 2 or 3 in the morning, and I saw that the stock market futures were down 700 points. And in fairness, we talk on this podcast about not referencing the point drop, but instead looking at the relative terms of the percentage drop, which meant that the markets were going to open somewhere down between 2 and 3%, which not the end of the world, but when for the first 6 or 7 weeks of this year, we've already had a challenging market, to add on to that, it's enough to make you take notice, and it's enough to make you concerned. And it's another layer of uncertainty that we're seeing. One thing that's guaranteed with the markets is that when there is uncertainty, you're going to see market volatility. And so far this year, we have uncertainty over what the Federal Reserve is going to do, which is they're the central banking authority for the U.S. economy. We now have the invasion of Russia into Ukraine.
Yep.
And it's a midterm election year, which historically, dating back 50-some-odd years, midterm election years for the first 3 quarters of the year have tended to trade sideways to negatively until the market got clarity of what the election results were going to be. And then we saw some stabilization. So with Russia moving into Ukraine, it just further creates more uncertainty, which leads to more volatility.
Yeah, and it creates some uncertainty with the situation that we have not seen since World War II, which
Right.
is a European country invading another European country. There have been invasions. Russia went into Afghanistan in the years and years ago, but
And they took Crimea.
they took the Crimea. Yes, they did that, but this was this is troops going over the border en masse, invading another European country. That is going to create a lot of uncertainty.
Yep.
Both of these countries are involved in the economy in separate ways. Russia very much so with oil and gas. I mean, you can use the example. It's a simplified one that Russia is basically one of the world's largest gas stations with the oil and gas that's exported. Other than that, though, ironically, not a huge part of the global economy.
No.
In terms of what they export, not anywhere near like countries like China, even Italy, which has a population half that of Russia, has a much more significant impact on the global economy.
And Ukraine has an impact too.
Sure, absolutely.
With the export of wheat and
seed oils.
Seed oil, yep.
They're the largest exporter of sunflower seed oil, rapeseed oil, which is a large oil, and basically any kind of oil that's not coming from an olive. So there's a lot here, but the uncertainty is certainly the fact that one of the world's three largest superpowers, Russia, along with the United States and China, has invaded another European country. Let's talk about what happened in the markets, because on yesterday, Thursday, started down 2 to 3%.
Right.
It's a significant move based on that news, but that's not how the day ended.
No, and it was down for most of the day. We saw the transition. It started with the NASDAQ, which is a technology-heavy index, as we've discussed before, largely on the belief that this uncertainty means that perhaps the Federal Reserve won't be raising interest rates as much as previously thought. That started the turnaround, followed by the S&P 500, and followed by the Dow shortly before the close of business yesterday. All three indices ending up in positive territory. A far cry from where we started the day.
Very much so. Today's Friday. We're recording this shortly after noon. When we both walked out of our office to come record this, the Dow was up over 600 points.
Yep.
All the indexes were positive in significant amounts.
Right.
So what should you be doing? What should someone who's listening to this, what should you be thinking about? What kind of action should you or may you be considering implementing right now?
There's three options. Sell everything, buy more, or be patient.
Yep.
And
I think you know where we're going to go with this.
Yeah,
by the way.
probably.
Well, you do, but if
Probably,
you're watching
yeah.
or listening, I think you probably have an idea where we're going with this.
We'll start with sell everything.
Sure.
Which it's always your money, and you can do whatever is going to make you the most comfortable. But by selling everything and abandoning the ship in the choppy seas, that is a decision that is likely, again, we talk about that pilot. Their success is defined by how they respond to the 5 minutes compared to the 1.2 million minutes of total flight time that they have. And this is one of those moments where abandoning the ship in the choppy seas could mean the difference of you having the retirement that you want to have, having the amount of income that you want to have, or not. We've seen geopolitical tensions before. This is not new. You go back to the late 1970s, 1980s, we've had a couple wars, 2 Gulf Wars since then, a number of other geopolitical tensions, and the markets over the long term have been very resilient. If you go back to the late 70s, early 1980s, the S&P 500 was trading somewhere between 100 to 200, and today we're at around 4,300. It's been able to weather those storms. From a psychological standpoint, though, every time it feels different.
Mm-hmm. Feels different, and often the circumstances are different.
Correct.
It's never the same. However, what is almost always either the same or very similar is investor behavior.
Oh, it's the same. Yeah. Doesn't
Always
change.
Is. The problem is not often with the investments, but with the investors. And what that means is that our minds don't do us favors
Right.
in periods of time like this. And we're not immune to this. We're not robots. But when there is the fear over a dollar lost or several dollars lost, as in cases like this, that hurts and that stings a lot more than the opposite, a dollar gained or several dollars gained. And that causes us to be wondering, what should I be doing differently? What action should I be taking to protect myself right now? The reality is, those that are often referred to as investing geniuses or gurus or some of the more successful investors are the ones who are able, amidst periods of chaos and turbulence, in those moments of sheer terror, to do the average thing while everyone else around you is going crazy. And right now, that average thing is likely sitting back, refraining from emotionally driven decisions.
And being patient. I had a client email me the other day and asked, have you ever seen the market go down this much? The answer is yes. 2 years ago, we saw it go down about 3 times more than what it's gone down now. But again, every time it feels different. Mm-hmm. And you mentioned it. The pain of a dollar lost is far greater than the pleasure of a dollar made. But in every one of these times, historically, patience has been rewarded. The hard part about it is keeping that even temperament and stay focused to have the perspective of the best action I can take right now is inaction, which often we think that means I didn't do anything.
Right.
But no, you did, because you made the conscious decision to basically take the harder path, which is it's a lot easier to sell everything. You don't have to worry about it tomorrow.
You actually made the hardest decision and took the hardest action to take.
Right.
Because many of those other actions, choosing to sell investments or make a decision that's emotionally driven, that may make you feel better in the short term. You may do that and think, all right, I'm okay. Now let's go ahead. Six months later, a year later, 3 years, 5 years, 10 years. Are you glad you made that decision? Likely not.
Right.
If it was something made in the heat of the moment. Mm-hmm. It doesn't often work that way.
Right.
And I think what is important to note, listen, Captain Sully, probably the best person, one of the best people in the world that could have been on that flight when it hit this group of Canadian geese and loses all engine power, because that man, what we didn't know at the time, was one of the most well-versed pilots in the United States in terms of safety regulation, safety training. The preparation is what helped make it possible.
Right.
And I like to throw this out there too. You've got more of these coming.
Yes.
More of these periods of uncertainty. And I've trying to say this even more to clients. Here's where we are right now. Oh, and by the way, you've got several more of these situations and scenarios coming in your lifetime. We hope you have a lot more, which means you're likely to live a much longer time. This is not the only time.
And this isn't done.
No.
You know, it's entirely possible that on Monday, markets will go down. Next week, markets can go down. The week after that, the month after that. We're not having this conversation to say this is the bottom of the market. No one knows. And no one ever knows when that time comes until it's happened and we're past it. But once the market gets clarity, that's when you're likely to see the stabilization. It's not so much a question of if, it's just a matter of when. And it's one point that you made, I think, a couple weeks ago. It's not about whether the investments will stand up to it. It's about whether the investor will stand up to it.
Yeah, because we don't know how this is going to play out in
Ukraine.
No one
does.
This is awful. It's terrible. This is an awful, awful situation. And our intent, I want to put this out there, our intent was not to minimize by any means what's happening over there and the human cost. Mm-hmm. From an economic perspective and conversations we've had with a lot of folks, we wanted to bring this podcast out. We don't know how long this is going to last. We don't know what the results will be. What we do know is that throughout history, periods of crisis and chaos, those who have been most rewarded, the investors that have been most rewarded, are the ones who've simply been able to remain calm and patient in the face of turbulence and trials.
And what we also know is that we're here for you.
Yep.
If you want to have more of a conversation, if you are concerned about this, if it's giving you anxiety, let us know. We'll set up a time to talk about it. And our goal is always to provide the perspective to help put your mind at ease and remind you of why you're investing in the first place, which often is for the long term.
If you're a client of ours, you likely know how to reach us. If not, that's okay too. Wade Group at BrightonSecurities.com. He is eWade at BrightonSecurities.com. I am CWade at BrightonSecurities.com. Happy to have a conversation and discuss this in greater detail if you feel that might be of value to you at this time. We'll be back again next week. Thanks for joining us. This is Wade into Wealth.